Let's now put focus on the chemical space. A whole host of specialty chemical stocks were under pressure on the back of the May export data. Now, if you look at the export data, there's a steep fall that we've seen year on year. For example, Aarti Industries has seen almost a 50% fall in May in the export data. Anupam Rasayan has seen an 80% fall. A couple of these companies like Balaji Amines, etc., are down about 40%. Let's find out more. Rohan Gupta, the director at Nuvama Institutional Equities, is joining us now to talk more about that. Rohan, what could explain, the reason behind such a steep fall in exports? And a lot of these companies have large exposure to export markets, right? So just tell us about, what the way forward looks like.
Yes, Sonia, hi, good morning.
Morning.
So, yes, Sonia, definitely the exports data which you are looking at definitely has been under pressure. So, first of all, we have highlighted that the current quarter, especially April, May, June, months are going to be bad for the Indian chemical industry, and not only just for the Indian players, but across the globe. The reason being that the demand slowdown, especially coming from the Europe and US, and also what we are seeing is that there is a sharp fall in raw material prices. At this scenario, the traders, the end user industry, the manufacturers, everybody tries to destock the inventory because they expect the further price fall. I think that is happening across the globe, across the Indian market. Some of the industries like, fluoro industries, ref gas industry have also been impacted in India because of the almost no winter, no summers or very delayed summers in northern market, which is a key market. So some of these reasons that these markets have been under pressure, the prices will keep on falling, and that's what is going to have an impact on an overall demand scenario. But I will just highlight that looking at the export data on every month basis and making and concluding the stock position on that basis may be misleading. We must look at that with the April and May put together, and the June have yet to come. So just only basing all the investment analysis based on the 1 month data may be misleading.
All right. Hi, Rohan. Good to hear your thoughts as always, and thanks so much for joining in. Navin Fluorine, that stood out, both on a year-on-year as well as on a month-on-month basis. The performance out there is looking pretty good. Is it led by the Honeywell project, or is there some other reason that you think?
So Navin Fluorine is the company which has commissioned a large capex in last 1 year. They have commissioned their not only just a Honeywell project, but they have also commissioned their HPP, and they have also commissioned their HPP plant also. So all these things definitely are driving the overall revenue growth on a Y-on-Y basis as far as the Navin Fluorine is concerned. We have to also look at some of the other companies where I believe that the current year may not be as bad as what this current monthly data is indicating, like maybe Anupam Rasayan, where you have just mentioned that the month-on-month data or Y-on-Y data looks very bad, but I believe that the company is on a growth trajectory. Similarly, for companies like PI Industry, where we are confident about the agrochemical sales will remain solid. So some of the companies, while reading the data, we have to be very, very careful. But yes, especially for the Navin Fluorine, they have commissioned a large project in last 12 months, and that is what going to drive the overall growth for the company.
Rohan, do you have coverage on SRF?
Sure. We have, Prashant, coverage on SRF. And
what's the view there? I mean, the stock is seeing a bit of a breakdown last couple of days. It's seen continuous earnings downgrades for FY24. Post third quarter we saw downgrades, post fourth quarter we saw downgrades, and the data for April and May doesn't look too good, as you said. What's the prognosis here, SRF?
Yeah, Prashant. So as I just mentioned, that the refrigerant gases, which is also key contributing segment for SRF profitability, and it contributed significantly last year profit. This year looks tough for refrigerant gases. As I just mentioned, that not only international markets are under pressure in terms of demand for ref gases, but even domestic market, because of delayed summer, has been impacted significantly. So refrigerant gases is a segment where we are seeing continuous pressure. Prices have slashed like anything in refrigerant gases. So we see that there is going to be continuous pressure as far as the ref gases is concerned. However, the specialty chemicals company is still holding on. They are still holding on their guidance of 20% plus growth in specialty chemical sector. So I think that that one segment will keep on doing well. But yes, there is overall going to be pressure on SRF, also because of packaging film, which has seen last year huge profit, but have started declining, and also in ref gases. So these are going to have an impact on SRF's earnings this year.
Got it. You briefly mentioned PI Industries, but I know you've been tracking that company for a very long time, Rohan, and things are getting interesting here, right? I mean, their Japanese customer I don't know how to pronounce it, Kumai, which is their largest customer, reported almost 24% year-on-year growth in their agrochemical revenues. So is there more upside both in terms of earnings and stock price for PI Industries?
Yeah, Sonia, so no mistake in pronunciation the name of the company. It's Kumai Chemicals, one of the largest customer, and definitely for PI, they have one of the largest product which contributes significant amount, as much as almost 55 to 60% of their CSM business. So the one single product definitely is a key contributing factor to the company's revenues. Fortunately, we see that there is still solid demand for this product in the global market. Their customer, that is Kumayu, has gone into more countries and expanding their product basket as well. So that is driving the demand for this product. So among the very few companies which will be able to protect their earnings growth in the current year in the challenging environment, I believe that the PI will be one of them, maybe still be able to post almost 20% plus growth for the current year. One more important factor in PI that they have recently bought a couple of pharma assets. I believe that this is also going to be the driving factor because of the consolidation. So this is the one company where we are confident about the growth, and I am still looking at 20% plus growth for PI in the current year, and that is going to drive the stock price.
Okay, we'll let you go on that note, Rohan. We're heading into the market opening, but thanks a lot for taking the time out and speaking about the chemical space. That was pretty exhaustive in terms of a discussion there. But